Good morning, everyone, and thank you for joining us today on this webinar with Cass and SONAR. We're going to be talking through our recent integration of being able to get your CassPort data directly within the SCI platform. And I am joined here by Lauren Howland with Cass Information Systems and Will Hopping, who is with the SONAR team. As we go through this webinar, please feel free to add any questions in either the attendee chat or there's a Q&A down at the bottom. We will save some time at the end of the webinar to go through questions, so please feel free to ask them as we go. And with that, I will go ahead and turn this over to Lauren to kind of talk through Cass.
Hello, good morning, everyone. As Danielle said, my name is Lauren Howland. I'm Manager Client Account Executive here with Cass Information Systems. Excited to be here today to showcase to you the new single sign-on function between Cass and SONAR SCI, helping to streamline access for our customers. I'd like to start off by giving a quick introduction of who we are at Cass Information Systems. So our core offering is our freight audit and payment. And the freight audit and payment that we provide today delivers complete visibility and control over our customers' transportation costs. We process around $36 billion in freight invoices annually for some of our largest customers, giving us unparalleled insight to the freight market. So we wanted to share today the value we provide only begins with the invoice management. It's the foundation of what drives our savings, business, and market intelligence. And we're looking forward to sharing here today how this functions. So we'll go ahead and get started here. Share my screen. So we've been working with the SONAR SCI team to be able to develop a link within our CassPort system to connect directly into the SONAR database. So here on the side, you'll see this is CassPort. This is our business intelligence tool that our customers have access to. From here, there's a link that you see here that says SONAR SCI. So if you become a customer of SONAR SCI and are a customer of Cass, we provide a direct link here into the database. So if I simply click, it will redirect me into the SONAR supply chain intelligence and allow you to take it from there. So I will pass this back over to Danielle to then take you through the rest of the presentation.
Thanks, Lauren. So you'll notice here on Lauren's screen that it will show three different tabs: CassPort data, My Files, and then Shared with Me. So in the CassPort data is where you will see your data that is ready to be analyzed. It's simply clicking that tab, clicking Analyze, and that is what will then take you into the SCI tool. Now, depending on how many lanes you are analyzing, which Lauren, there we go. Depending on how many lanes you are analyzing, it will be able to load those and give you a notification at the bottom that it is processing. You can leave the screen while it's processing. The more lanes that you are, the longer it will take to process. Usually it's not very long, couple minutes at most for those larger files. And once it is completed, you can then start to view that analysis, which will take you to the summary view page I have up here. Now, in the summary view, it is going to provide the total transportation spend, which is going to be all lanes, all volume, and your rate that was uploaded. And then in the market versus actual section, that is going to give you the difference between your total transportation spend and what we are showing as the contract market average. So this is how those two values stack up. If you're seeing a negative, then overall you are underpaying on that total transportation spend. If it's positive, then you're overpaying. We also drill that in even further here with the opportunities and your at-risk lanes. So what we're doing here is really identifying the low-hanging fruit. So opportunities are going to be those lanes that your rate is showing to be 10% or more above that contract market average. And these lanes are considered easy lanes to cover. Then your at risk are the opposite. This is going to be areas where your rate is under the market average by more than 10%, and the lanes are typically difficult to cover. So these are the most at risk for potential service failures, or are those carrier dependent lanes as well. And then we show total volume, whether that was manually uploaded, because you do still have the option to manually upload, or what came over through that CassPort data. Then drilling in a little bit more in the pricing alignment and cost insights map down at the bottom. Now, depending on how your networks are set up, you can view this based off of origin or destination markets as well. And it will highlight those areas where you may be under or overpaying. Green is going to be underpaying. Red is going to be those where you are overpaying. So if you click into any of these markets here, it will take you into the network view. Now, there are some times where this network view may take a second to load. And what it's doing is it is aggregating all of the lanes that are coming from that singular origin, and it's giving you an overall summary to be able to manage that, warehouse or DC or the facility that's there, and manage all of the lanes that is coming from that area. We will aggregate the average my rate. So this is your rate that came over and what that delta to the contract market average is, as well as how many lanes are within this facility. And then we'll also give you an average lane score of, are most of the lanes here typically difficult to cover, easy to cover, or do they fall somewhere in the middle? You can also show more details, which will drill into what those average market rates are, both on a contract as well as a spot. It will show you the fuel surcharge, and then your total miles, total transportation spend, total volume, and then the total metric tons of carbon that would be used for this. And then finally, and really the biggest piece in here is this pricing alignment. So this is going to come from those opportunities and those at-risk lanes of giving you the total transportation spend for this specific facility that falls into either of those categories. On the right side, we take the analysis one step further, and we show what the current rejection rate is for that origin market, and what that change has been over the last 90 days, as well as a year-over-year view. The key market trend here is going to give you a glance in weekly movements of, are we seeing strong loosening, strong tightening in regards to that capacity? And then finally is our volume metric. So are we dealing with a typically outbound heavy market or an inbound heavy market? And what this really drives forward is, if you're dealing with an outbound heavy market like we are here, that just means that there is more demand for capacity landing in that area than there is drivers coming into it. So you can typically experience tighter capacity conditions, upward pressure on rates at times, and it's just more susceptible to volatility. Where in inbound heavy markets, the exact opposite. You've got more trucks coming into that area than you do loads for them to service. So this is typically easier to cover, downward pressure on rates, and that sort of situation. We also show the market share rank. So are we dealing with a larger market in the sense of that volume demand, or a smaller market? In this sense, we're looking at a much smaller market, being that 128 out of 135. And then finally, our map at the bottom shows you all of the lanes that are coming from that market, and the lanes are color coded as well. So this allows you to really isolate which lanes are the most disruptors for this facility. Where are we off in compared to that market the most. Again, this is the same as the map on the summary page. The green is going to be underpaying, while your reds are the overpaying compared to that market average. Now, drilling in even further, when you go into the lane view, which is going to be the most detailed, and this is going to show you a list of every single lane that you analyzed. And then you can drill into those specific lanes showing, oops, if I'd quit right clicking, showing information and aggregation specific to that lane and the total, volumes and miles associated with it. So being able to see the total transportation spend for that specific lane, and if that lane is considered easy or difficult to cover. I want to highlight the risk and efficiency quadrant here. This is what I would consider probably the most important piece on this page. And what this is going to do is it's essentially a scatter plot that will show where all of your lanes are situated for this page. So you'll notice we've got several pages here, and there's different ways that you can filter and sort and organize these lanes as well that I will cover here in just a bit. But these 4 quadrants that your lanes may be in, whether you're in the high risk zone where you are over market on typically difficult lanes to cover, or you're in that carrier dependent zone, which is going to be still those difficult to cover lanes where you're under market. So this is going to be areas where you will want to strengthen that carrier relationship, knowing that these are potentially at risk of going into that over market. And you want to just make sure that you do what you can to keep that difficult lane in that section. Then you have your savings opportunities. These are going to be your easy lanes to cover where you're over market. This is where you may want to renegotiate the rates on that lane, bring it closer into where that market average is. And then you have your efficiency zone. This is going to be where you're under market on easy to cover lanes. If you have an opportunity to shift volumes to any lanes that are falling in this section, you will want to do that because these are where you are most efficient. Now, depending on where your lane falls in either of these, we will provide the guidance that shows at the bottom. So this particular lane is falling just barely in that efficiency zone. So it's saying to shift more volume here to maximize cost savings and that operational efficiency. And you'll notice you can click on different lanes, or if you hover in those quadrants, it will show you what the lane is, and then we'll highlight that lane in your list as well. So you can see that savings opportunity is going to say push service providers for better rates and optimize that cost structure. The filtering in the right is where you can adjust the sort if you want to go to highest to lowest volume, if you want to sort by contract rate, spot rate, or if you did do a manual upload, we do have a custom field option that you can list in there, so you can even sort by that as well. Or even isolating down your freight types or countries. So some options in there as well. Circling up to the top section here. So this is just going to give you some more insights into the rates for this lane. So we list contract pricing first. We do show what that delta to contract rate is, along with what we are seeing on that low, average, and high side of that rate. Now, let me see if I can. So you'll notice as you click from lane to lane, the dot within this bar will slide along the scale, and it will show you where your rate is compared to this low, average, and high. The track spot rate pricing does the exact same thing, shows the delta, shows that low, average, and high as well. And then in the center, we have the confidence scores of simply how far we expanded to produce the rates for that lane. This is 1 to 5 scale here. When you are at that 5, it's highly confident. And then the closer you are to 1 is lower confidence, lower density. And then those we had to expand further to produce that rating scale. Drilling into these opportunity and at-risk lanes, again, these are really highlighting the low-hanging fruit. These are the lanes that would require the most attention or would most likely need the most adjustments to kind of bring it back to that average. What's nice about having the quadrants listed here is you can essentially look at those really large outliers and sort of cherry pick those lanes that need the most attention and see what's going on, where are we at with it, and what is our best course of action here. Clicking at the at risk, kind of get some of the guidance listed here. Let's see, let's click on a random lane. So then this guidance, being in that carrier dependent zone, like I said, strengthen those key partnerships to maintain competitive pricing and reliable service. Now, we provide all of this information for you in the UI to isolate those lanes, be able to filter down, providing a clean visual when managing whether an RFP, whether it's before, during, or after that RFP cycle. You can choose your date ranges that you want to analyze your rates for. But if you need to, or if you wanted to, you also have the ability to export your lanes as well. So if you wanted to bring it into Excel, bring it into that CSV format, you can download just your network view. So having kind of that facility aggregations there, or you can also do your lane view. Now you can do both. So when you export that, it will put all of the data that we're displaying here in the UI into that Excel format. The network view will automatically download 2 different exports. You'll have your inbound and you'll have your outbound as well. And then the lane view is going to be one file, but it will have a column for the over and underpaying sections here. So that way you can isolate those lanes individually as well. And I will pause there. I covered a lot of information, but I also want to see if Lauren, Will, if you guys have anything that you would like to add for anything that was covered.
I can hop in. I think great overview, Danielle and Lauren. I'm really excited about this opportunity for Cass and Sonar customers. The ease of access to benchmarks and how you're performing in your truckload transportation space compared to your peers in the industry. It's really a valuable thing. And starting kind of with that high level overview of am I overpaying or underpaying from a network view compared to the market. But even if I am beating the market like we are in the sample file, there's still a lot of really great opportunities for additional cost savings and opportunities to be proactive and avoid that high level risk. And so we really want to provide this opportunity for customers to dig in and better understand their network, better understand where they're in a position of strength, where they have really great relationships with their service providers, and areas to maintain that, and then also areas where you should go back to the negotiating table and really try and get lower rates, demand better service where applicable. And so really excited to kind of move forward and offer this opportunity for everybody.
Yeah, definitely. And, the SCI that we are showing you today is a, new and improved version of our supply chain intelligence tool as well, where we've added a lot of those additional market insights that Sonar is able to provide through our tender data. So I circled back to this network view because there's one thing that was not displaying on that initial lane I had selected here, and that is around intermodal volume. So this is, one piece of data that we are providing that provides a little insight in potential scenario management of are there lanes here that I may have the potential to move intermodal versus truckload, kind of provide some of that, those conversion metrics there. So this is just simply our current intermodal volume for that particular market. As you kind of noticed, it will not show for every single network that you select on. It's only going to be those that have the ability for that intermodal. And we just simply show you what is the actual volume that is moving on for that particular market. And then if that volume is considered high, medium, or low, or moderate or low, we also show that month over month and year over year changes in those volumes as well. And all of this data, the rejections, our key market trend, and the head haul index are all coming from the tender data that we have fueling those market insights within SONAR as well. So to dive in deeper, because we did get a question around the head haul index, this is a very, very simple calculation in where we are looking at the outbound tender volume for that market, in this case, Salt Lake City, and then subtracting the inbound tender volume for that market. So if your outbound volume index is higher than your inbound volume, you're going to get an outbound heavy market. If it's your inbound is higher than your outbound volume index, that's where you're going to get an inbound heavy market. Now, because our volumes are based on an index, this isn't showing an exact one-to-one truck-to-load ratio. It just gives you a gauge of the overall balance in that market of, are we dealing with more demand than capacity in that area, or are we dealing with a surplus of capacity and less demand? It just kind of gives you some insight into negotiation leverage, potential risk for additional volatility, and things like that. To go into a little bit more detail on this key market trend and kind of what this is highlighting, I have to say that this is probably one of my favorite data sets that we have in SONAR. I've been with the SONAR team for going on 5 years now, and I most often hear people say that the rejections are their favorite. Even here internally, everyone's like rejections, and they're great because they are an excellent leading indicator into spot rate movements. But what I really like about the weighted rejection index and this kind of key market trend area is it really takes those insights one step further. And not only is it looking at a week over week change in those rejection moves, but it's also taking into account the market share. So how large or small that market is. And it's allowing you to prioritize the most significant capacity moves with those volumes. So in my opinion, it's the best of both worlds because you're getting in one simple data set insight into how capacity moves relative to that demand.
Something I can add in here, Danielle, too, is a thing I love about the key market trend is how it's always a real-time indicator. It's updating daily. It demonstrates how those capacity movements are changing. And so, it can be really tempting when you're, benchmarking a contract network to look at it only every so often. How are my contract rates? And then maybe I look at this again when it's time for my next RFP. But this is a great use case for logging in regularly, at the beginning of each week and seeing, okay, out of Salt Lake City, what is capacity doing there? What is demand doing there? And if we see a sudden tightening, that highlights, hey, this week I might face some risk. And so I probably want to reach out to my service providers and have a discussion with them, make sure that the assets are in place or that tenders are being sent out and accepted to make sure that I don't suffer any issues early on and really able to be proactive and engaging with the market rather than reacting and having to suddenly, maybe move a load onto the spot market or deal with a load being delivered late.
Yep. Nope. Agree. And having these insights are not only valuable in long-term RFP pricing of knowing where current market trends and how they're shifting, but it's also going to be even more valuable if you're having to deal with mini bids, project loads, or anything like that. Being able to see, those more near-time insights as well will help drive those, mid-bid decisions. And we did have another question around LTL and package. So all of the contract and spot rates that we are listing here are based off of full truckload. So it is going to be comparing full truckload to full truckload. Same with the rejections, head haul index, and all of that is based from full truckload. All right. And I think we have, we did get a question on the carbon calculation. And Will, I don't know if you recall off the top of your head. I know it, it's there somewhere, but I can't recall off the top of my head how that is being calculated.
Yes, it's a pretty simple calculation based off of some fairly regular assumptions about carbon emissions for a fully loaded truck based on length of haul of the loads and the volumes moved. So it's not something all that complex, and we can certainly share the exact methodology to anyone on a case-by-case basis. So happy to share that in detail. But yes, it's basically looking at how many loads are you moving, assuming a baseline weight and the distance traveled.
Yeah. And with that as well, while we're talking calculations, I also want to call out the fuel surcharge that we have calculated in here. So when we're looking at the rates, spot always has fuel included, so nothing being added in there. Now, in order to create a true apples to apples comparison, especially when you're talking about, providing delta to the market versus your rate, we do have fuel that is added into the contract rate that we then add that same fuel into your rate. And if you wanted to know what that calculation is, we do provide a hover. And if you're not able to read it, what we're doing is we're taking the DOE at the national level. We subtract out $1.20 for that base fuel cost, and then we divide that by 6.5 miles per gallon. And then that is what will give you that fuel surcharge calculation there. So overall, we are really excited for this integration, really excited to be partnered with Cass and being able to provide our mutual customers an easy, more simple way to analyze all of their data and freight, being able to drive those actionable decisions from this, and are looking forward to our, customers getting ahead and taking charge of their transportation spend. So I haven't seen any other questions come in here. Lauren, Will, anything else you would like to add before we call it?
Danielle, this has been great. I really appreciate you sharing the dashboards here, giving a good explanation to the folks here on the phone. So if anyone has any questions, current Cass customers, please reach out. Happy to set up some time to go through this further, answer any questions that come up after the fact. Like Danielle said, we're very excited about this partnership and to be able to continue to progress our partnership with our single sign-on. So thank you again. This has been great.
Awesome. Perfect. Yep. And if anyone has any questions about how to get started with this, feel free to reach out to your account manager, whether directly with Cass if you don't have SONAR yet, or if you are already a SONAR customer, feel free to reach out to your account manager here at SONAR, or as always, cs@gosonar.com. We'll be happy to help. This is recorded. You guys will get a link to the recording tomorrow. And we thank you for joining us and hope you have a good rest of your day.